Capitulation? Well, the bottom fell out today in a classic capitulation move that at one point saw the Dow Jones Industrial Average slump 1,600 points. So let's talk about the anatomy of that destruction. The market spiked lower at the start of trading, and then it rallied higher. But the smart money wanted to see that early support point tested. Well, it was tested, and it didn't hold. And each wave of selling triggered another wave. And, well, it was a confluence, really, of things. Weak hands started selling. Computers and algorithms selling took off big time. And then maybe, who knows, maybe a couple of big names got hammered as well, because it certainly seemed like someone was carried out on a stretcher. As far as the computer selling is concerned, it defied the laws of physics. At one point, those downside clips seemed to be coming at the speed of light. Was it about unbound confidence? Because we know it emerged. The rally was full swing last year. And then at the end of 2017, we really got hot. Think about this. If you look at the trajectory here, September, the stock market rally took a sharp move higher, and then it gained even more momentum at the end of November, and it just started going straight up. That's what they call a parabolic move. I talked about it on this show. When you get those, you know, eventually you're going to give some of it back in a similarly sharp pullback. Of course, it's one of those things that when we talk about it sounds reasonable, but in the midst of such a pullback, it does feel like you're in the eye of a hurricane. Now, I do find it interesting. Many are comparing this selling period to 1987. We had a new chairman just came on the scene, a guy named Alan Greenspan. He started his job facing a market crisis situation. That man, of course, would go on to be called the maestro because he took swift action. The sell-off was short-lived. The ensuing rebound lasted only 12 years. Now we've got Jay Powell. He's the new chairman. In fact, started his first official day on the job today. And, the single biggest loss in the Dow Jones history. Ironically, though, his best move may actually to find a way to telegraph to investors that he won't be making any rash moves, or at least he won't be making as many moves as the Fed had previously signaled. I'm talking about rate hikes. Investors, of course, will also want to hear from the White House. We did hear comments from President Trump, but maybe even more soothing words that direct attention, again, to the underlying economic fundamentals of this country. And those fundamentals include the latest read on the service economy. Today, we got the ISM non-manufacturing sector report up almost 4 points, blew away consensus. New orders and employment at record levels. For those unfamiliar, by the way, with these sort of market drops, it can be gut-wrenching, let's face it. But even for those of us who have been through a few market crashes, it's not a pleasant ride. And while it may sound callous, the fact of the matter is that this sell-off is happening sharply, and I like it. I really prefer this, that we go wherever we've got to go to the downside, that we get there sooner rather than later. So the question is, well, when we get there, what do we buy? This is the week to begin building positions in great names that we know because we saw them much higher just recently on earnings and guidance. Sectors I'm focused on more specifically: consumer discretionary, industrials, material, and technology. So how do you go about the buying? Well, I don't know that you have to take full positions. Maybe you can ease in and start to build them. I'm watching for a session that spikes lower, rebounds, goes down to test that support, and then goes back up again. I want to see this market tested intraday. Now, I'm not sure where the near-term bottom is going to be, but I'm extremely confident that people who buy quality names on weakness this week will be up in 2018. And I even think there could be what they call a V-shaped bounce to this market. It doesn't have to happen, but I think it will.